So this is going to crash, and I think Bitcoin could go down to 3,000 to 7,000 and then go to 500,000 to 1 million in the next global boom. 86% is my target for equities, which is the biggest thing we've seen since 1929 and 32. And yes, first half of 2022, my target is this first crash. It's only the first crash of the bigger crash over a couple years. Will probably bottom around July, mid-July. So we're in that first crash. A big chance we'll see another slight new high. I think stocks are going down and you need to sell on weakness because this is not going to be another correction, okay? People are used to it, last 30 years, up, correction. No, this is the beginning of a long-term bear market. Bear market rallies are the strongest rallies because when something finally peaks, people don't believe it at first. So it goes down and then people buy the dips because they've been taught to do that the whole downturn. So the rallies are strong, but at some point these rallies are going to be disappointing. I think this will be it. We've gone down, we'll have a rally here, and if we go down to new lows in the next month or so, which I expect them to say July, people are going to finally say, uh-oh, something's wrong. Something's wrong that we may have really seen a peak in stocks. And I'm saying January 4th and the S&P 500 was the peak, and major markets around the world have been peaking for a whole year from February 2021 to recently. So if a normal peak and correction, everything goes down. No, you don't see markets peak one after the next unless it's a long-term top. People think, the economy's strong. You know what, the economy's strong? The Federal Reserve's put like $5 trillion of money printing in the last few years and $5 trillion in the government in fiscal stimulus. It's all stimulus. The economy underlying from 2008 to now is weak. So the problem is that when things finally go down, it's going to be stronger than people think because the economy is so weak. Without this stimulus, we'd have nothing. They are now forced into tightening when the economy is a lot weaker than they think. They think, the economy's okay. Well, they printed so much money. They've given people so much free money. It looks okay. As soon as this thing falls, it's going to be stronger than people expect. So I do not think the Fed is going to have four tightenings. I don't think they'll get that far before the economy. Indicators, ECRI, my best leading indicator, says we're already on the verge of a recession now, not 6 months from now. We're about to go into recession already, and this is after $10 trillion, half of our GDP, of stimulus. How could you stimulate that much and go into a recession again? Why? The economy is the weakest it's ever been, as my indicator said 30 years ago. You can't keep a dead body going, okay? I mean, really, it's this simple. The economy died in 2007, which I predicted 30 years before it happened. Baby boom, greatest boom in history, growing up, spending money predictably at age 46, now 47, and then we would have a downturn from 2008 to 2023 until the millennials came along and drove us up. They are fighting this downturn when the fundamentals are weak. So they are assuming the economy's stronger than it is. The economy's only strong because of their stimulus. I have an inflation indicator. It's workforce growth. You know what costs money to the economy? Young people. Anybody have kids? They cost and produce very little, okay? We had the greatest inflation in the 70s, not because of bad government policies or deficit, it's because the baby boom entering the workforce. Now we have the opposite. We have deflationary tendencies as baby boomers die faster than millennials rise in their spending. We've never seen a smaller generation follow a bigger one. We've never seen this before. So that's why they have to stimulate so hard, because the millennials, yes, they're going to start spending, but the baby boomers will continue to spend less until they die by 2042. I can put a number on anything you want to put when people spend the most, die, anything. That's when the last baby boomers will die on average. So the trends, even though people say, Harry, the millennials are going to come. The millennials are not anywhere near the size of the generation, the baby boomers. The baby boomers caused the greatest boom in history, which I called in the early to mid 80s, from 1983 to 2007. And ever since, why have they been stimulating so hard and more and more and more? Because you're fighting a downtrend. The biggest generation in history is dying. It's the everything bubble, so you have to be out of everything. There's only two things to do well in a crash when everything goes down. Stocks, real estate, commodities, everything, including gold in the end. Treasury bonds. The safest long-term bonds 30-year treasuries from the United States government will be the safe haven. Is the U.S. government is the United States going to go into recession? Yeah, but we're the best house. We have way less money printing than Europe and way less more than Japan. We're the best house. Our bonds, 10 30-year treasury bonds, will be the safe haven. Gold will not be. And I'm in a conference where everybody thinks gold's going to be the safe haven. Not. It wasn't in 2008. And treasury bonds did go up when everything went down in 2008. It's a financial asset. It's the king, I would say, of the commodity sector. And it will do very well in the future when we get past this, because India is the biggest driving factor after China. India will be the next China. And Indians love gold. I've never been in a country where people love gold more than it. Gold is an asset that has bubbled like everything else. All financial, remember I said all financial assets have bubbled. All will crash. Only the treasury bonds, the safest bonds, go up in that scenario, as happened in 2008. Gold went down, I would say in the next year or two, down to 900 to 1,000. And I'm telling you, that's going to look good compared to other commodities and stocks. Stocks going to be down 86%. And then I think gold in the next global boom, which will be dominated increasingly by Southeast Asia and India, and they love gold. I think gold could go to 3,000 to 5,000 in that boom, but not in the bust. Gold could be 3,000 to 5,000 in the next global boom between 2037, when the millennials peak in spending, and 2038 to 40, when the next commodity bubble. Gold is really the king of the commodity bubble. So I think gold could be 3,000 to 5,000 by 2037 to 2040.
Wait.
If it does go down to 900 to 1,000, I think that'll be, for gold buyers, the buy opportunity of a lifetime. But what I'd rather buy? I'd rather buy global stocks, especially India. Cryptocurrencies are the digitization of all financial assets. Is that a big deal or not? So that's what it is. Bitcoin, I see, when it grows and gets more acceptance, could be the standard. That everybody's talking to this conference about gold coming back means that no, gold will never be the standard. It cannot keep up with the global economy. We're in a digital economy now, and Bitcoin could become the new standard for the digital economy in the future, replacing gold in that function. So I think Bitcoin, and I've tracked this versus the dot-coms. I compare the crypto to the dot-coms in the late 90s. It wasn't just a bubble in tech stocks, it was the dot-coms, Amazon, okay? Amazon was a nothing burger and became the greatest retailer in history. So this is going to crash, and I think Bitcoin could go down to 3,000 to 7,000 and then go to 500,000 to 1 million in the next global boom. So that will be the buy of a lifetime, but I wouldn't touch it with a 10-foot pole, even down 50%, 60% here. 3,000 to 7,000, yeah.
In the next
2 years.
2 years.
The global crash,
where
all financial assets, and Bitcoin is a new financial asset. It's like the dot-com. $500,000 to $1 million.
By 2037?
Yeah, and you know what? That would be enough for it to overtake gold as a global standard for money. You have to peg to something. I mean, here's the thing. This crash, after the greatest bubble in history, when everybody took off the shackles, is going to show that you can't just print money and grow, okay? And everybody's done it. U.S. is not the worst player here. Europe and Japan are worse. When this crashes, it's going to say, we need a new standard. We need something real, and we need something for the digital realm. Gold is not that. I think gold will grow to 3,000 to 5,000 in the next boom because Indians love gold. They like it as jewelry. Indians wear jewelry in places we can't even imagine.
Okay.
They wear more jewelry compared to their income than anybody I've met in the world. Bitcoin is going to be the new digital standard, I think, for money. And that's the standard. So other things, crypto, are innovations in finance. But I think Bitcoin becomes the global standard. It's not there yet. It's not big enough. It's not widely accepted. And I think it'll crash the most. I think Bitcoin, like I said, 4,000 to 7,000 from 69. That'll crash more than stocks. That's what I would. If we have this crash I'm predicting in the next 2 years, the number one thing I'd buy would be Bitcoin or Ethereum coming out of it. They're the winners here. The millennials are going to kiss the ground when this happens, what I'm saying, because real estate will go back down to 2008 to 2012 levels, the lows we saw after the last crash. And remember, stocks crash quick. Real estate took years to hit a bottom, really mostly 2010 to 12. Real estate will go down at least to those levels and become affordable to the millennials for the first time in their life. They're the winners. Guess who the losers are? People like me, baby boomers who've invested in real estate and keep saying you can't go wrong buying real estate, own real estate, and real estate goes down. Now, last time, 34%. Even the Great Depression, 26%. This is the biggest decline. This will be 40 to 50% real estate. We've never seen that before. That'll be a shock. And right now, if you are invested in financial assets, you are going to lose a lot of money, I think, in the next 2 years. The S&P 500 brought in is going to go down 86%. That's
Right.
670. It's been up to almost like 4,800 at the top, okay? Real estate down 40 to 50%. Last time it was 34%. This is what hits people the most. When their home goes down in value and they're underwater in their own home and can't even borrow against their own equity. So that's my focus. And commodities go down even lower, and gold goes to about 900 to 1,000 in the crash and then zooms in the next boom. Only when things get back to reality, which they are nowhere near. So everybody thinks, well, the Fed keeps doing this. No, we're in a bubble that's already so extended. There's nothing the Fed can do except extend this a little longer. The only way to get back to normal is to have a crash. There's no other way to get there. My statement is, without any qualification, this is the greatest financial asset bubble globally in all of history, and it has to come down, so all financial assets come down except the very safest, which is only the treasury bonds of the best governments, and especially bad house and a good house in a bad neighborhood, the U.S. treasury bonds. The only place I'd put money. Otherwise, and if you're too scared to do that, just be in cash. Just go to cash. Everything will come down and your cash will buy more of all things.